Hey guys, this is Adam from Dodjit.com and this is your video briefing for Monday the 30th of November 2009. Now, we had a little bit of a volatile week and we spoke about this in our last video. We were stating already that we are starting to become a little bit of a cautious bull, meaning that, and we stated this in the last video, that if you've managed to catch part of this rally going higher, now would be a good time to start to decrease your exposure to the market, start to close your positions a little bit. And the reason for that is because we've been already climbing for 9 months, and I think the markets at the moment, they're very tender, meaning that anything can really start off a major sell-off, especially as people also want to take profits along the way. And what's basically happened is, if you look very carefully, you can see that we are now starting to consolidate a little bit. We're like type of grinding higher, consolidating. We are still forming these higher highs. You can see 1, 2, 3, 4, 5. The problem is that the market isn't showing signs of continuing higher at the moment. Now, what happened last week? Last week was, again, we basically just consolidated, and Thursday the US indices, they were closed. Now, surprisingly, on Friday, and this was also due to Dubai, and what basically happened was that news came out last week and showed that there's a lot of problems there. They've got now their own real estate problems, which isn't really that surprising. The thing is, look at this. The markets really dropped on Friday, and they dropped on low volume. Look at this. Now, this normally happens after a market holiday. Normally, investors like to take advantage of the long weekend. That's why I'm not really reading much into this drop on Friday. What we're going to have to do is we're going to have to see how the market's open today. See what type of direction. I personally think we're going to continue to consolidate around this area. I don't think we're going to really plummet lower. And basically what's going to happen is probably going to receive roughly around another week or so of consolidation, or a week and a half, and then we're going to have to see how this goes in towards the end of the year, because we are expecting this slight rally towards the end of the year. Obviously it all really depends now according to the data that's going to come out from Asia. Now, another reason why we are a little bit skeptic on this market is because of the following. Normally, when markets start to the rally, or when we're starting a new bullish cycle, normally the indices tend to trade in the same direction. So what we're going to be looking at is, let's say, the indices from the US and Europe and Asia, they're all going to be trading higher. Now you can see here at the moment, the US, the broader market, the S&P 500, is trading higher. Now, if we just flip over to the DAX, for instance, you can see that even though the chart does look the same, we have now received a lower high. So it means that basically investors from across the world are starting to think slightly different, and we're not all now looking for a continuation of this massive rally that we've had for the last 9 months. You can see at the moment we've got a lower high, and in addition to that you can see that this chart is starting to become a little bit messy. We're not receiving this clear direction. It's more like a kind of consolidation pattern rather than a bullish market or a bullish trend going higher. If we just flip over to the FTSE, you can see that basically this chart really looks like the S&P 500. Maybe not so much around this area, but as we've been climbing higher, we've received these higher highs, higher lows, and now we dropped. This was on Friday. We bounced higher. And you can see that we are now receiving support around our 50 MA, which we've done in the past as well, here, roughly around here. Now, when we flip over to the Nikkei, we're talking about dollar NIKK, you can see that this is kind of the odd one out. If you look at it carefully, you can see that we've completely broken this trend going higher, like that. We are now completely declining. We've formed this lower high. We've completely dropped lower. We've even dropped below our 200-day moving average, which is a really negative sign. And things just don't look good over in Asia. So you can see by looking at those charts that not all investors now are thinking alike, and not everyone's thinking that we're in this massive bullish trend, that nothing's going to block our way higher. You can see that certain indices and certain regions are even thinking that we need to receive a much larger correction. And I think this is also weighing on the US indices. You know, there's a lot of uncertainty going forward, and I think this is really going to prevent a nice rally, and that's why at the moment we have now changed our status from a bullish trader to now a cautious bullish trader. We've also stated this numerous times. If you've taken part of the recent rallies, so then you need to take money off the table. You need to keep low exposure to the market in case, yes, they do rally one leg higher. But then you have to take caution and always use a stop loss. Now, flipping over to a few Forex charts, we also basically on the Forex market, we received some choppy trading. We broke out. This is the euro against the dollar I'm looking at the moment. You can see that this trend line that we've been looking at already for quite a couple of months, it managed to hold on Friday. And basically what happened last week was that we broke out. It did look like a complete breakout. You know, we closed above this resistance level. We dropped down, smashed down on Thursday, and this was due to the Dubai problems. And then on Friday, look at this. What a reversal this was. This was absolutely amazing. We completely crashed, reversed through the whole of the session, and now we are climbing higher. So, you know, we are at this critical level again. Just keeping a close eye out. Obviously, if the markets manage to hold, I'm talking about stock indices, so then yes, we could see higher levels on the euro against the US dollar. Again, for those of you that got stopped out on this, let's just zoom in for a second on this. For those of you that got stopped out on this, so basically I would use this higher level, this level roughly around here. Let's see what the level is. Works out to be 1.5143 as a margin of security. Basically, we don't want to get caught out twice on the same trade. So we are now at a critical level. Let's see how this plays out. The interesting chart is the Australian dollar against the US dollar. Check this out. If you look carefully at this chart also, we've had this same trend line. Look at this. We've had this same trend line going higher. And what's happened? We've broken out of our trend. So basically what we're looking at the moment is this consolidation area. Resistance around 0.9327. Support around, let's just place that, 0.8954. So basically, if you compare the charts to what they were a couple of months ago when everything was just climbing higher, things don't look so good at the moment. There are certain indices that aren't following through. They're not climbing higher. They're not even holding their ground. Certain currency pairs that were trading in a type of trend, a nice trend that we could also bound according to trend lines, they've now broken out. The euro dollar is still trading within its recent levels. The yen has really strengthened, which isn't that much of a good sign because it does show risk aversion in the markets. If you are trading out there, make sure you're protecting your positions. You know, don't get too wild at the moment. The markets have really shot up over the last couple of months. Some are claiming that they've shot up too fast, too high, too fast. So, you know, be cautious. Hope you enjoyed the video. My name is Adam from Dodjit.com.